Hi, welcome to this video today, which is on the 31st of January. We are on Sunday. Now, in today's video, we're going to look at one of the best Forex trading strategies to use in 2021. A lot of traders search that phrase. What is the best strategy for the current year? Well, the strategy I'm going to look at in this video is good in any year. And it's basically trading sentiment extremes, looking for the market to be too bullish of a currency or too bearish, and then going against the majority. Now, what we do have in the US dollar is it is at its most bearish since 2011. The speculative short position in the dollar today is around the same size as a decade ago. A decade ago, we saw the dollar mount a huge rally. Will we see a big dollar rally in 2021? I think we will. Dollar's already shown some strength. I think it could show a lot more. Risk to reward on dollar longs is really good. Now, what I'm going to do in this video is just go through the sentiment extreme and how to play in our view, and we're going to look at a number of dollar pairs. All offer really fantastic risk to reward in our view. Now, what we'll do is we'll go and take a look at the charts, but just before we do so, obviously, just please do keep in mind, it is my view. As of right now, it can of course change in line with the market action and conditions. If you want all of our trading techniques and also our daily technical sentiment analysis of 14 FX pairs, click on the link below this video and you can get live access to our member center. You can also check out our recommended regulated ECN broker, follow our Facebook page and join our Facebook group of traders as well. Right, let's go and take a look at the charts. We're on our first chart here, which is Euro USD. I'm just going to go through the technicals and how I see the euro and obviously the other pairs in just a moment. But what I want to do first of all is just look at how big the sentiment extreme is against the dollar. Yeah, how short are speculators? Well, I've got this chart up in front of me, which is the latest from the CFTC, CFT Net Traders positions, and you can see three key groups: non-commercials, asset managers, and leverage funds. They've all sold the USD hard, particularly asset managers. That is a record low in terms of the most short they've ever been. Only just off that low. Okay, so the speculative position really big. I haven't updated this sentiment indicator this week. I'll do it as soon as I get it. It's from Citibank. It's called the Pain Index, and what it shows you is speculative funds overall, how short they are the dollar. You can see the red line here. You can see how short they are on the right. It's the equivalent of 2011 in terms of the size of the position. Look what happened in 2011. Okay, dollar against the basket of currencies did a big rally there, then accelerated and then went up again there. Are we going to see a big rally again? I think so. I think market just too short of the dollar. Let's move on to the next chart. I think this is from Macro Bond. Again, it's showing the most stretch positioning, i.e. these majors against the USD on the upside since 2011. They also make reference to 2007, where there was a big dollar rally when the extreme peaked. In relation to the euro, this is the Citi Pain Index euro only. And when you come up to this line here, you can see it, okay? You see the euro roll over, which it has done. Look at the rollovers on previous, pokes at the level or through the level. Really big declines, okay? I think Euro USD will be going down. A lot of talk about Eurozone. I'll just go through these charts in relation to the euro. The zone is going to recover quickly. That's what you read over the media. It's not in that bad a shape. Well, it is. Look at these virus cases against deaths. They're on the rise. Okay, you got 2 more months of it, I think. Cold weather helping the spread of the virus. Then we can look at the economic activity, okay? In terms of COVID impacting on economies. And we've got a few here. Sorry, let me bring that up a bit. Here's Eurozone, big impact, just coming off it there. US, light blue line, up here. US is doing way better than Eurozone. The Eurozone fundamentals for us have just turned out and out bearish. And you've got really big speculative positions long, which points to the euro going down. Again, here is the US against the Eurozone, UK, Japan, Australia in terms of manufacturing and services. The US economy doing pretty well, isn't it? Okay, so if you look at the US dollar, people have sold it down because they think that it's not going to do as well as other economies going forward. That's not brought out by the facts. Okay, there's other factors supporting the US dollar, which I'll discuss in another video, which are bond yields, which I made reference to in the last video. And also, I think the dollar could really benefit from what's going on in stock markets. Stock markets look like they could turn down in a big way. That's going to be hugely dollar supported, but the dollar hasn't got much downside anyway in our view, because speculators are short, heavily short, and I think they're going to come out the market. Right, that's my quick review of sentiment and some fundamentals generally in relation to the US dollar. So let's go back to the chart. Now this is Euro USD. Obviously I'm extremely bearish. The euro went on a big rally here. I never thought it would really get through 122, but it did. Up she came. We top out 123.50. We want it to come down through 122. We took a trade early, as you can see. We do come through the level, we'll add. We very often do that. We'll come in early with a trade, then add. 122 for us was the key level. It broke. Tried to get back through it, couldn't get through. Briefly through on that red, down. And a limp kind of rally with a couple of tail pokes, the 122 level. And we're just kind of doing not much at all. Volatility relatively low. It's not getting better for the Eurozone, as I've just said. You're going to see downward pressure, in my view. The size of the speculative position points to a 500 pip fall to 116. Obviously got 118 in the middle. Okay, euro for us is a sell. Yeah, okay, we could try and take out that 122 level, get through it, but I don't just doubt it. I just think this market now, buying is exhausted and we're going down. I put my stop 122.50. We're stopped out, make 15 pips, but I'm hoping that doesn't happen. If we were stopped out, we just come back in through 122. Sometimes when you get like a bearish extreme in the dollar, it'll take a little time to play out. So I'm not saying the dollar is going to go roaring to the upside next week. Personally, I've got a gut feeling it might, but we're in it for the long term. Okay, when the bearish extreme breaks, the dollar is going to have a really big rally. Okay, so that's Euro USD. Let's go on to the next pair that I want to look at, which is AUD USD. This for me has confirmed a trend change to the downside. It's benefited from risk on and really strong commodity prices, and you can see this really nice rally. But then look, you double top, go down, try and get back up. It's kind of half-hearted. Down, try and get again, and then we've broken. Okay, so this moment in time is just 100 pips. Okay, however, I think over 400 pips to come, could be even more. Any rally now is a selling opportunity. I don't see that 78 level giving way. We might just break through here, this down sloping trajectory, but this level here I think is firm. And in terms of the Aussie dollar and commodity prices, if you're trading the Aussie dollar, keep your eye on iron ore, which I'm just going to bring up a chart of, which I posted in the Facebook group. Iron ore is just a bubble. Okay, this is a big rise up here. It's just speculators. Okay, come down a bit, double top, we're coming south again. Okay, if we can continue to the downside, which I think we will, amount of speculators long point to a 25% fall to this level here. That will drag the Aussie to the levels that I've indicated. And if I took this chart back even further, you can just see how big the bull run is in iron ore. It's, what is it, 130% in the last year. It's a huge rise. It's got nothing to do with supply and demand fundamentals. Okay, so keep your eye on iron ore. I think the Aussie dollar looks really good. I need to go back to the charts. Where are we going to go next? We're going to go to another commodity currency, which is the Canadian, not Canadian. Yeah, it is the Canadian dollar. Sorry. Here it is. Now, in terms of the Canadian dollar, full little bit of a rally, bit of choppy price action down here. And now we're kind of moved up a bit, okay? And, not much in this pair at all. But it's a bit like the Aussie dollar. Commodity prices generally are a bubble. Speculators are heavily long. They're thinking there's going to be a quick recovery in the global economy, which there isn't, in our view. So they piled into commodities. Also, the dollar has been weak. That makes going long commodities attractive. The key commodity in terms of the Canadian dollar, obviously oil. Here's crude oil, 50% rally. Okay, that's nothing to do with supply and demand fundamentals. Specs piling in long. Now look, just choppy sideways action. We can come through this tail here. We should go to 44 and then probably down to 40, which will weigh on the Canadian dollar. Commodity complex generally just overbought. Okay. If we go back to the Canadian dollar, how can you play it? We can come off this first level support here. We'll just wait for this double top to give way. I think 132, then 134 on the upside. Moving on to some more USD pairs. We've got NZD USD, a little bit similar to AUD USD in terms of the fundamentals behind the New Zealand dollar. All the commodity currencies for us are bearish. It's a nice rally. That for me is the final push of the bulls. Then you get some resistance coming in here. 5 pokes can't get through. Another 2 with a nice red rejection. Couple of nondescript blue candles. Just let her come through here. Okay. And 68, then 66. So that's going to be near enough 600 pips if it comes to fruition. Okay. But dollar just so oversold. We shall see. Next pair. This pair isn't doing much at all, but it is one of our kind of favourite trade setups. We've already got a trade in, and we're going to add. Okay. Now, in terms of what we like, is when volatility drops down, you kind of chop sideways. You can see the volatility has dropped by these outer Bollinger Bands contracting. Yeah, very low volatility. That warns of a big move in our view. We just got to break out above this resistance level. If we do, we should follow through quickly to the upside. And the risk reward is really good. At the minute, our stop is back behind here. But if we break out and clear the 89.30 level, our stop can come in here. Really good risk reward trades in our view, all dollar pairs. Obviously, my targets have got to be hit. But I'm looking back to 2011, what happened then, and I think it could well happen again. Where are we going next? We are going to go to USD SEK, the strongest currency this year, Swedish krona, against the USD. And I know a lot of traders, kind of neglect the more minor pairs, but they very often will give you your best profit opportunities. Okay, you pay a little bit more on pip spreads, but not too much. And the recommended broker that's underneath this video gives really good spreads. So never neglect the minors. If the euro goes down, the euro proxies will go down quicker, or euro correlated currencies, and the SEK, I think the USD is going to push to the upside. Really nice downtrend up. Find support here. And then we're kind of small nondescript candles looking for the breakout above this level here, which is 840, go 841. Should see big follow through buying because there's a huge amount of speculators short in this pair. Okay. Another one I like, again, this is tight sideways action, is USD Czech krona. You make new daily lows, then we find support. Volatility is dropping down. That warns of the big move. Don't come through this trajectory. You want to come through here. Okay, get through there. We should see the volatility pick up, and I'm looking for this whole decline to be retraced. This is the Polish zloty. This one is actually already bottomed out. So I think if you're coming in fresh, I would go for the USD CZK out of the two Eastern European currencies. This is what I was saying that caused me a little bit of grief. Okay, and I was, looking for the big breakout, and we've got the big breakout. Look at the volatility low. We break out, and now a big blue on Friday. That's going 22 in my view. And I think if we open firm, you could come in, tuck the stop behind first level here. Minute I got it behind second, or if we dip back, take it on strength. But the dollar rally's hard. The emerging markets, and Mexico's an emerging market, the emerging market currencies will be hit hard. Where do we want to go to next? Again, here's the one, USD Turkish lira. Very volatile pair. And over the years, we've done really well out of this pair. Again, look at it, volatility dropping down. You want an upside breakout. Look how tight those Bollinger Bands are. Last pair I want to look at, USDs are. Nice move up there. Back. And then kind of messy and in a kind of like little channel there. Breakout to the upside. See if she runs. Minute our stop is behind here. Bring it up behind there if we break higher. So the USD for us, even if we're wrong, it's not much risk against what we see as fantastic reward. And in terms of the big picture in financial markets, I'm not going to cover stock markets and bond markets, the dangers that lie ahead in the global economy because of what's going on in stocks and bonds. I'll do that in a separate video. But if what we think could happen does, the USD will rally in a really, really big way. It's going to rally anyway in our view. Stocks coming down, bond markets going higher, just would boost the USD even more. That's the biggest extreme in a decade against the USD. I think it's well worth looking at USD longs. So that is the video for today. Thank you very much for watching me as per usual. Take care and have a good day.